Good morning. Happy first day of spring, the 1st of September. I'm Jessica Amir, market analyst with Bell Direct. Well, the Aussie dollar continued to soar. It's hit a new two-year high overnight, 73.75 US. The reason for that is because the US dollar is continuing to fall, with inflation there now being encouraged to rise over 2%, while interest rates are likely to remain at record lows for some time. The US indices closed mixed overnight. The top 30 stocks, as measured by the Dow, fell by about 0.8%. The Nasdaq, another story, rising by about 0.7%. That was supported by Apple shares, which lifted 3.4%. We also saw Amazon and Intel shares rise over 1% each. Investors, of course, continuing to favour companies that are seeing earnings and share price momentum growth. What was noteworthy, though, overnight, August in the US closed about 7% higher. In particular, the S&P500 and the Dow up by about 7% each. That's the best monthly gain since the 1980s. In Australia, a different story. The ASX 200 closed higher for the fifth straight month yesterday, up 2.24%. That was our best August return and best 5-month return since 2009. On the commodities front, not much movement there. Gold is holding steady where it traded yesterday, 1,974 US. The oil price did lose a touch of steam. It's now at 42.82 US, but the devaluation of the US dollar should, in theory, support oil prices and fuel demand. In theory, though, what to watch today? Well, the Aussie futures were earlier suggesting a 58-point fall, or a fall of about 1%. And the reason for that is because the Aussie dollar is continuing to strengthen. Secondly, we did see Australia-China tension take another turn overnight, with an Australian journalist being detained in China. But importantly, on the economic horizon today, the RBA meets. Rates, of course, tipped to remain on hold at 0.25%, where the bank said is its lower bound, but the focus will be on commentary and what we can expect from our national growth going forward. This will be closely watched. Why? Because GDP data is out tomorrow, expected to show that Australia entered its first recession in 30 years. What else to consider? Well, BHP's listed New York version fell 1.4%, and Rio there fell by about 1.2%. Three trading ideas just quickly. Online furniture business Temple and Webster, TPW, their shares soared 18% yesterday to a record high to $9.69 after delivering much stronger results than expected. The reason for that is sales ticked up 161%. TPW, importantly, has got no debt and cash of over $80 million, and that opens up further growth opportunities. All in all, that's why Bell Potter upgraded TPW's buy rating and price target to $11.40, implying 18% share price growth for TPW. Secondly, PointsBet PBH, their shares fell about 7% yesterday, but they managed to hold on to record territory. They're trading at about $13.03. That's where they closed yesterday. But Bell Potter sees further upside and upgraded PointsBet's buy rating and target to $18.40, and that implies over 30% share price growth. So why is that? Well, PointsBet media partnership with NBC Universal and proposed $300 million equity raising completes its strategy of enabling it to potentially generate $1 billion in annual revenue by 2025, with a plan to also have 10% market share in each of the US states. And thirdly, Sezzle, SZL, their shares fell 9.4% yesterday, down to $10.27 after reporting that their loss sank from 4.8 to 8.2 million in the half year to 30 June. On the positive side, though, active merchants and customers increased by in the order of 220 to 340%. Now, Sezzle offers a very similar service to Afterpay in the US and Canada, also integrates Google Pay and Apple Pay, just like Afterpay. Overnight, Ordminet increased Sezzle's price target to $11.80, and Trading Central's charting also indicates its shares are giving off more bullish than bearish tones. But do your own homework. Happy trading, stay safe.